Auto, joining us on the phone line from Pune, and that stock is up 4.7%. It's been a strong quarter for Bajaj. Mr. Desai, thanks very much for joining us. We were online with a guest in Washington, but thank you for joining us on NDTV Profit. Let's get straight to it. It's been a strong fourth quarter. Congratulations on that. Break down the volumes that you've seen in terms of the volume growth in the domestic and the export market in the fourth quarter.
Well, we have had a very good fourth quarter, as you can see, especially in the domestic market, where in the fourth quarter we did approximately about 468,000 numbers. That has been one of the major reasons that we see this result coming out is because of the mix that we have seen. For example, in the fourth quarter, we have seen a growth of 7%, and that's coming from the Avenger family.
Right.
So the Avenger family, which had done just about 11,000 numbers in Q4 last year, has done about 83,000 numbers in this fourth quarter. And that's a big boon to the profitability. Similarly for us is the three-wheeler business that has done exceedingly well. So in the three-wheeler business where we've done 48,000 numbers in quarter 4 last year, we've done a record 71,000 this quarter. So for us, the domestic part of the business has done exceedingly well and has helped us in the profitability.
Okay.
In the exports, as you know, we have been facing some headwinds. But again, the good part over the exports is our market share in these countries have gone up, and the mix has changed very favorably towards the pulsars. So as against last year when we did in totality about 250,000 pulsars in the export market, this year we have done about 312,000 numbers.
Okay. I just want to now look a little forward, sir. Yes, the Avenger played out really well in the fourth quarter based on the numbers you've shared with us, and the three-wheeler business. But can you give me a sense of whether you'd be able to maintain this rate in the quarters ahead for the Avenger in particular?
Well, as far as the Avenger is concerned, I see it stabilizing between the 20 to 25,000 number mark. As you know, the Avenger was launched sometime end of October, beginning of November. So we should be seeing the Avenger stabilizing on a whole year basis between the 22,000 to 25,000 numbers. As far as the three-wheelers goes, I think we should be seeing significant growth. As you have seen in the month of April, we showed 86% growth over there. So year 2, what we are seeing is not only are we growing significantly in the permit zone or the clean fuel vehicles, but we are doing exceedingly well in the diesel vehicles as well.
Okay. How does this all fit in with the volume growth guidance that you've given for FY17? What's the, comprehensive growth number you're looking at?
Well, one is looking at an overall number of about 4.5 million vehicles as against the 3.9 that we have done right now. Let's say this is the start of the year, and this does presume that the industry will also go given the monsoons, etc. I believe that 95% of this is very much possible. We have given an export target of about 1.6 million as against the 1.73 that we have done. Exports, I think we are still facing a little bit of headwinds, but my own personal view is by August, September, things should improve. So we are on track to achieve the export numbers in totality. We are targeting approximately about 300,000 in three-wheelers. That is very much in the cards. So that leaves the domestic market where we are looking at somewhere near 2.6 million vehicles, which does factor in the industry growth post-monsoons.
Okay, so there's a fair bit riding on the monsoon. I'm sure that there's just that factor to consider on the upside. But just a little bit more on the export market because, on-ground conditions haven't changed dramatically. So are there risks to the upside? You understand Nigeria, Colombia, Egypt, those markets and what's going on there. What could potentially change?
I think the figure of 1.6 million that we have considered for ourselves is a conservative figure looking at what I would call the bleak side. So I would say that the 1.6 has got a potential for an upside rather than a significant potential for a downside.
Okay. Will you reflect a little bit on the competitive pressures in the premium segment where the Avenger is, of course, a key product in your portfolio? Surely the competitive forces are building up there.
Well, if you look at it from our point of view, with the launch of the Avenger, our market share in the sports segment has actually gone up to about 47%, which is extremely high compared to the 43% that we declared in the previous year. Now, two things to be noted is when I'm quoting this 43 and 47%, I'm talking only of the premium segment where we are not bringing in the RS200 and the KTM. There again, if you see, the market share has gone up to 60%. So overall, in the premium and sports segment, our market share has gone up significantly. Let me just clarify over here, when I'm talking of market share in these segments, I'm not really bringing in Royal Enfield into.
Right. You know, we're just going to get Mr. Desai once again on the line. We just lost that connection abruptly. It'll be interesting to note, A, his comments on the competitive pressures, and B, of course, what the margin picture could look like going forward, because the exports are high margin, and as the export realizations sort of shrink or become a lower share of the total pie, could there be a risk to margins or not? That's one question to ask the, Mr. Desai. But the stock is still up 4.85%, 2,495 on the Bajaj Auto stock, on the back of what's essentially a strong fourth quarter for the company. Well, broadly in line with what the street was expecting, and we should be back in conversation with Mr. Desai in a moment or so. In fact, I think we already have Mr. Desai back. So you were just at that point where you were talking about this doesn't factor in, we were talking about the competitive lay of the land, and we got lost when you were saying this doesn't factor in Royal Enfield. Unfortunately, that thought got interrupted.
Yeah, so if I remove Royal Enfield as a separate category, we have grown our market share in this from 43% to close to 47%. And the super sports where we are represented with the KTM and the new RS200, our market share from 35% gone to 60%. Now, as far as the overall business is concerned and the competition that is coming in over there, we are very well likely to defend our position and in fact grow our position, because we are coming up with the all-new Pulsar 400, which will be about 2 months away. Okay. And then the entire Pulsar family will get upgraded in the second half of this year. So we are very much on track to defend and grow the segment.
Okay, just any risk to margins, because as your export realizations, sort of shrink a bit or stabilize, and exports are at a high margin. Can you just give me a sense of where the margins could stabilize in FY17?
Well, we don't give margin guidance, etc. But if you see, based on the business model that we have, where we have high business EBITDA margins coming from exports, three-wheelers, the Pulsar family, I would say that a 20% margin for the whole year of 16-17 is maintainable.
Okay, Mr. Desai, I'm going to leave it at that. Thank you very much for joining us this afternoon.